Hello, and welcome to this edition of The Inside Scoop. I am Sam Beveridge, Customer Risk Manager with Ardent Mills Solutions. This month's WASDE report offered us some very meaningful data and strongly suggests a tightening of a global supply that is currently being harnessed by geopolitics and weather. The USDA took the opportunity in this report to address Chinese trade wars and emphasize an impact to production that we have been discussing from a fundamental view. Here at Ardent Mills, we agree with the USDA and begin to take a hard look at the bullishness that wheat has from here on out. Join me as we take a closer look. Let's start with a focus on wheat, the most bullish commodity in the report, as the USDA cut world production 22 million metric tons year over year. The last time we were at these levels was 2012, when we witnessed hard wheat prices reaching $9. Low prices have begun to cure low prices, as production cuts and weather issues begin to paint a picture of a very tight supply and demand. Cuts were widespread, with Europe's production reduced 4.5 million tons, Australia 2 million tons, Russia 1.5, and Ukraine adding another million. These cuts of 9 million tons of the world's Big 8 exporters, excluding the US, takes 327 million bushels out of the market. Furthermore, year over year, that is 20 million tons out of the world's stocks, and an even more impressive 28 million tons from 2 years ago. World stocks continue to tighten, and from our analysis, hard wheat will be the driver in the future. The stocks-to-use ratio continues to decrease at a drastic pace. From today's report, we are now at 49%. That is from our old crop highs of 76% in 2017-2018. Remember when I mentioned 2012 prices of $9? Are we going back to those levels? Only time will tell. More questions can be asked. Do the Big 8 exporters outside of the US have enough supply to meet demand? The odds are stacking up, and most likely trade will be forced to the US. Now, if the US exports 25 million tons, that is not a big deal. But should we find a situation with weather and production cuts increasing, and the US exporting 150 million tons, then wow, the current pricing will be forced higher. The US has always been the export of last resort, and is not out of the question in the months to come. Briefly, on the US, we saw cuts to the carryout of 160 million bushels year over year in hard wheat, and an expected increase in spring wheat to reach 585 million bushels. This is the biggest crop we've seen since 2005. And with continued perfect weather, we may question if a 600 plus million bushel crop is possible. Spring wheat will continue to struggle as we find demand. We have a farmer that is harvesting a new crop and is still holding on to a large old crop. Spreads will continue to compress across intermarkets as hard wheat supplies are tight and spring wheat loosens. Very little change has happened in the soft wheat markets, as there's been a slight increase to the US export. Turning to corn, the data was supported with a slight reduction in US stocks month over month to 1.55 billion bushels. Trade was expecting an increase that they did not get, and the USDA left yields at 174 bushels per acre despite exceptional crop conditions. Furthermore, Brazil witnessed production cuts of 2.5 million tons to bring their crop size down to 81 million tons. As we talk about the stocks to use, corn remains extremely tight at 10%. Now for soybeans, a topic of trade disputes of the US, China, and the world. The USDA made large revisions to the US export numbers by taking 250 million bushels out of the equation and showing a slight reduction of 8 million tons to Chinese imports. I think it's important to take a look at historic bean prices here and the current fundamental environment. We are on 10-year lows and have seen prices move over $2 lower since June. I think it is time to find some coverage. In summary, the report shows that there is a growing problem with forecasting the tightening of global export stocks outside of the US. The US has been the last resort exporter the last few years with a strong dollar. It looks like we will see the US participate in the world export markets in this next year. There is a significant risk to the upside in futures prices as weather and demand take their toll on the world production. Please understand your input costs and be active to secure margins in flour versus waiting until it's too late. Okay, folks, that covers the July report. If you have questions or would like to understand more about the markets we are dealing with today, please give me a call or send me an email. Signing off, this is Sam Beveridge with Ardent Mills Solutions. Have a wonderful day, and I'll see you next month.